Hello, Austin, Texas, and welcome to the Home Team 512 with Troy and Colton, where we bring real estate and money together for your education and hopefully a little bit of entertainment. This segment is brought to you by Security National Mortgage, where we turn houses into homes by financing your American dream. And today, this is real estate, and we are very fortunate that someone just showed up to hang out, and we were able to convince him to come on TV and talk about the real estate. Because if you're looking anywhere, especially the North Austin area, but anywhere really in Central Texas, Rambo here is one of the premier real estate agents in this area. And so welcome. Thank you so much for coming on board.
Thank you for having me here.
Looking out right now, it's a very unstable market,
Yes.
and it's not, and the houses have kind of settled. The interest rates have kind of settled, and the inflation is kind of settled, but there's so much uncertainty out there.
Yes.
When you're talking to, buyers and things like that, what are the things that you're kind of having to help them with?
The main part is everybody's asking me, is this the bottom? Are we at the bottom? Is this the right time to buy a house? So that's most of the buyers. And obviously the sellers are like, oh, can I still get a good price for the house? Is this the buyer's market or is this a seller's market, right? The stats tell us we are in a stable market, but
Right?
we've been in a seller's market for so long in Austin, and Austin has been aggressively correcting for the past couple of years compared to rest of the U.S. housing market. Austin is in a very unique situation, right? Where now some people are looking at the national average and thinking still the market is, oh, is this the right time to buy? And some people are like, oh, we are in the doom and gloom. Austin is going to keep crashing all the way down. And that's where I have to educate people. And it's like, it always depends upon why you have to buy a house now. Is it a requirement, or is it something that your life is demanding you to make that choice? That's the only time that you should try to see if that is the right thing to do or not. And like you mentioned, it's always the financing part. It's always the choice, what's right for you and your situation. That is more important than the market itself.
Yeah, I'm definitely seeing that. And that, like you said, I mean, it's actually probably the most stable market we've had really in 6 or 7 years. Because,
very much.
in 2019 to 2020, into 2022, you couldn't find a house.
Yes.
And then in 23, 24, and parts of 25, the values were they were trying to find it.
Yep.
But I just want to ask if you are, but I'm seeing stable pricing. I'm seeing that stable, and I feel that Austin is moving back to that regular 3-4% appreciation kind of normal market.
Exactly. So that's what I have noticed as well from the last year or so. We do a lot of new construction here because we are in Texas. We have a lot of land, we have a lot of development going on, and we have a lot of industries coming into Austin as well. A lot of big factories that everybody knows. And now all the shadow factories or industries that support them are also moving here. So the demand is still strong for the long term. In terms of the pricing, as you mentioned, yes, we are in a stable market compared to the last 2 years, I would say. So we are a little bit more settled now. And again, when you're looking at the long term, we are definitely on that path of the standard growth rather than rapid growth and rapid decline. Yes.
Yeah, and that's exactly what I'm seeing. And so, it's funny, the last time I saw this here was around 2011-ish, right after the kind of the big crash and stuff like that. And so people that are really paying attention are trying to find that bounce. And a lot of people started buying homes late 2011, 2012, 2013 in this area because the market, and so they caught those homes coming off that bounce. And everything I'm seeing makes me think that's kind of where we are now. Now, it's not going to bounce like it did in 2012. But it's going to move back up. So you're getting a home that a year ago would have cost you $75,000 more. You're getting it today at that price. And then in a few years, it's going to appreciate more, according to the data.
Exactly.
Data can always change, but that's what the data says that I'm seeing. And so I'm just glad to hear that, because I mean, you spend a lot more time out there with the people, hearing them, kind of by the time I get to them, they're in a home, they're thinking maybe, there's very specific, but I don't get to see the general public, the ones that don't come to me. I don't get to see those people. So that's the ones that you deal with.
And with everything that is stable, right? What do you think is causing the uncertainty among buyers, sellers, things of that nature?
Because it's the settlement time, right? So every time when something huge is happening, right? If they're going with the wave or are they going against the wave? Nobody wants to lose money,
Right.
right? Everybody's like, is this the right time to buy? It's like, it also always depends upon the person who is asking the question, right? It's as cliche as it sounds, it depends, right? So what's causing that uncertainty is the stock market has been bouncing around a little bit, right? Which is usually not like, you don't fall that much and then regain immediately, and then fall again that much and then regain immediately, right? So people are a little uncertain. It's hard to predict things. So that's why, but the real estate market has always been a lagging indicator of in general economy. So when the economy is crashing, it takes a little bit of time for the real estate to fall through. But the economy recovers again, it takes some time to catch up as well. But the highs and lows are a little bit more smoother than in general economy or how the public sentiment is.
Yes.
Right? So that's where the uncertainty is coming from. They're looking at stock market and it's like, oh, there's going all the way up and down. Oh, is it the right time to buy? It's like, cool. What's your financial situation?
Yeah.
Why do you need to buy a house? Comes back to the same basic questions. Why is it important for you to buy that house?
Absolutely, absolutely. And so, when somebody's looking to purchase a house or to sell a house, how would they get a hold of you?
It's pretty much, I do a lot of my outreach for people through my Instagram.
Okay.
Obviously, we'll have websites and phone numbers and stuff like that, but mostly Instagram is my main channel.
Okay. And what is that name?
Rambo Realtor.
Rambo Realtor? Okay. So that's IG or is that
Yeah, IG.
IG. I don't, I'm
Instagram.
At Rambo.
yeah.
At Rambo_.
Yeah, perfect. No, that's excellent. So, and so how long have you been doing real estate in the general area?
In this general area, I've been involved in real estate for the last 6 years, but I'm licensed for a little more than 3 years.
Okay.
And I'm a full-time realtor. As soon as I got my license, I was like, oh, this is not a job that you can do part-time.
It's not.
It's very demanding. It's very emotional as well. And I was a software engineer, so I'm very data centric, and I have my master's in computer science. But then once I started being a realtor, I really liked what I'm doing. My interactions were better. I love talking to people. I love helping people. So I was like, this is more aligned with me.
Okay.
So I did the full jump.
People that are good at this job are good at this job.
Yeah.
It is funny that there is a sentiment in the general public that realtors don't do anything. I know that's not true, but it is. It's just funny because I'm like, yeah, trust me. When you work for yourself, you work a lot harder than when you work for someone else.
So yeah, there is no manager, there is no CTO, CEO. Everybody is the same guy.
Yeah. Or, yeah. Your accounting, payable, everything.
Yeah, very much.
Yeah. And so, as far as for, the listings, what are the listings that really seem to move right now? Because, some of them are selling in 30 days and some are selling in 6 months.
So
what's the difference?
I'll give you a very real live example that I have dealt with in the last 3 weeks.
Okay.
So we literally had a multi-offer situation where I was on the buyer side, where we went in the same day the house opened up, because we've been eyeing that community for a really long time. And we know the house is priced right.
Okay.
We walked the house, we liked the layout. We knew we have to go aggressive. We went aggressive, but there were 3 offers on table.
Oh, wow.
So we were able to be communicative with the other agent. Again, communication always wins. If they have confidence that you can be communicative and be there and not tense them up, they will prefer your offer. I was communicative. We gave a very, not too much over asking or aggressive or throwing money at the table, but we still gave a competitive offer and communicated well. We won the multi-offer situation. And we had in a different situation where they started doing flex listings where they are not completely public, but still people who are licensed agents have access to those listings. I was on the buyer side again on that listing, and we went and saw the house. Before it even came live, it sold.
Oh, okay.
But there are other homes that we also toured that were sitting there for 3 months, 4 months, 6 months. And when you walk into the house, you already know that this house might not be priced right. Right? It's always the price. In where I learn real estate at my brokerage, there is a saying called selling a house is a party and the invitation is the price.
Right.
And if your invitation is not right, people are not going to show up. So that's always around the price. And also there are some strategies around it. It's again,
Yeah, and and we just were talking to somebody once, and they said they're like, I was talking to him. He's like, the people across the street are listing their house $20,000 less than mine. And I'm like, well, they want to sell their house more than you do.
exactly.
Exactly.
It's always the market.
Yeah, and it is hard, I think, sometimes because sellers, like you said, are still holding on to that 2021 pricing, and they're like,
Can I get that?
Yeah.
Can you get that from me?
Maybe if I wait 6 more months, I'll get that pricing. And that's
And it's an emotional decision as
very
well.
much,
So-
very much. It's all emotion, and that's the job of a realtor, to educate them and tell them, hey, these are the facts. This is how the market is moving. What do you want to do?
I bet having a software engineer degree helps with that, because you can really give data to them that a lot of other people can't in your industry, that just say, hey, here's because it is, and even though it's emotional, the value is data driven, because the appraiser doesn't look at anything other than comparable sales.
Exactly.
Facts, not feelings.
Yeah, and that is one of the things I think that's really hard, is because you're trying to take an emotional situation and you're trying to apply strict facts to it, and it takes a talent.
And also it's not just giving them facts and say, hey, here are the facts, like why are you not looking at it? It's more like they have a reason, right, why they want to do what they want to do. It's just like acknowledging them, understanding where they're coming from, and just sitting down and educating them, right? It's not like telling you you're wrong. That's not the way to go about it, because they have a reason why they want to do certain things, right? It might be a situation, maybe they don't want to lose that much money, and we just have to sit down with them and say, if you don't sell it, this is the balance sheet. And if you want to rent, or maybe move on to your next phase of your life, it's pretty much, these are the numbers.
Yeah.
What do you want to do? It's just like educating them.
Yeah, and it's funny. I hear a lot of sentiment about, "Hey, well, I'll just rent it if it doesn't sell," and I'm like, I have.
It's not always the right thing. It's
I've
like
been a landlord for a long time. That's not. It's not
not fun,
right? It's not. It's 3 in the morning. My garbage disposal doesn't work. Just kick it. Call me back tomorrow, but just kick it for now. Those are things. It's funny that people don't understand that, and it is not as easy as they think it is. You have to cover that payment till at least.
Exactly.
And those are the things that a lot of people don't understand.
not just that, right? When somebody is in a sticker shock with the price, the price is not what I want, that usually means they bought the house in the peak of the market, right? Now, technically, their payments doesn't even cover for rental.
Right.
So now they're technically in a negative cash flow every month for renting the house. So it's always, again, we have done that for some people, but because their situation is different. So that's why it's very important for them to sit down, educate them, inform them, and help them make the most informed decision.
Absolutely. Well, thank you so much for coming on our show. And just remember, if you want to reach out to Rambo, it is Rambo Realtor, or it's at Rambo Realtor on Instagram. That's the best way to get a hold of him.
And you won't miss my headband.
Yes, he will take very good care of you. He will get first blood from all of your deals for you. Hey, again, this segment has been brought to you by Security National Mortgage, where we turn houses into homes by financing your American dream. And in just a second, you're going to see some commercials. There are going to be listings in this area. If you do go through the QR code and you pick one of those listings and you finance it through us, we will give you 1% off of your interest rate for the first year. And hang on, because when we come back, we're going to have a special guest that flew in all the way just to talk to you all. And we'll see you in just a minute. Hello, Austin, Texas, and welcome to the Home Team 512 with Troy and Colton, where we bring real estate and money together for your education and hopefully a little bit of entertainment. This segment is brought to you by Security National Mortgage, where we turn houses into homes by financing your American dream. Hey, and like I said, we had a superstar coming. We have the infamous Joe Howard. I have such a hard time having rolled that A in there. He is the Vice president of Security National Mortgage. And he has come to grace us with his presence and his knowledge, and it is very extensive. He has been with the company for over 20 years. Very few people can say they worked 20 years, let alone at one company. And our industry is in a is still, even though it's settled down, is still in a transition, and there's just a lot of things going on in the world today. And one of the things that just happened, which is quite interesting, and something I've been talking about for a while, is that the industry has just approved a fourth bureau for the credit industry.
Yes. Thank you first to Troy, to Colton. You know, I get to come and hang out with these guys in the Hill Country.
Yes.
Never been to the Hill Country
Beautiful
before.
Hill Country.
You tell me how beautiful it is, and now I get to come and hang out, and it is beautiful. So coming all the way from Utah. So
Yes. Yeah. And we're very excited about this. And we want to thank Toll Brothers for allowing us to take our time and have our show at their beautiful home.
Yeah, it's beautiful, beautiful country. Love it. So, well, you ask about credit scores. You ask about the mortgage industry. Yes, we continue to have struggles in the mortgage industry with rates going up and down every day. The struggles that we have every day. You guys are in the middle of it, so you know what it is. Yeah. It was great to see Rambo in the previous one. Rambo did a great job talking about real estate. For us in the mortgage world, FICO score. So if we want to go back just a little bit, you know, to the late 80s, 90s, and Fair Isaac. A lot of people ask about what is a FICO score? Where did it come from? What is it? So FICO score, FICO, is from Fair Isaac Corporation. They came out with a recipe, if you will, of how to calculate what your score is based on how you make your payments, whether that's on credit cards, car loans, mortgage payments. They came up with a calculation, and they said, hey, this is what we have. You guys can use it. And they went out and said, hey, why don't you guys use this? Well, Fannie Mae and Freddie Mac, right, which is two government-sponsored entities, came out and said, hey, we're going to start using this in the 90s. This is how we want to score this. So there's three of them. So there's three companies. You know which companies they are? Experian, TransUnion, Equifax. Okay, these are three private companies. So they've been paying FICO score for all these years for their recipe. Well, they're the cooks in the kitchen, right? They take all of the recipe themselves, and they don't have all the ingredients because my FICO score might be different than your FICO score, or Colton's FICO score. It's different, and lenders aren't required to report to all three. So Security National Mortgage, if we're servicing a loan, right? We have your loan, we did you, Troy Manella, did the mortgage for a borrower. They bought out here at this beautiful Toll Brothers, and they're making the payment to Security National Mortgage. Well, we're not required to report your payment history, how well you pay every month to all three. So maybe we pick two. So the middle FICO score, if you're going through a loan application and you're working with a borrower and they say, hey, what's my credit score? Well, we pull it from three bureaus and we pick the middle one because we might have a 750 FICO score. We might have a 700 FICO score, but we've got one in the middle at 720. So we use the middle FICO score. Well, the three bureaus that we just mentioned, those three, have said, we don't want to continue to pay FICO, and we don't want to continue to use that. So we're going to come up with our own scoring system, which should help. It takes trending data and gives a score a little bit quicker than the FICO score. So there's going to be two scores that you can use. You can use the FICO score. You can use, right, the three bureaus will use that. And then you can actually, as of yesterday, use Vantage score.
Yes.
So the three bureaus have come up with that FICO score. So they have said, this is our recipe for calculating a FICO score. It uses rent payments. It uses trending data to calculate that score. So it's going to change the mortgage industry. We don't know yet. We say, everybody's saying it's going to lower the costs of a credit report, but that's yet to be seen.
We will see, right?
Yes.
Yes.
Sample size is still
Yes.
currently very small.
So, yes.
Yep, correct.
Yeah, and I'm sure, it may lower, 25 cents or things like that would be my guess.
Yeah. If it was 25 cents, it would be lowering it. You are, yes. So that would help 25 cents would help, but we need a little bit more than that to help home buyers and homeowners.
You know, when you think about credit scores, it's for most people, it's a very elusive concept.
Yeah.
They just have no idea. They're like, hey, I have good credit. I pay my bills on time.
Yes.
And for some people, that works out. They pay the bills on time. They have good credit. But for some people, utilization is something that they don't understand, especially on credit cards. If you have a $1,000 credit card and you owe $501 on it, it lowers your score. If you owe $299 on it, it helps your score go up. Even if you pay it off every month, it just depends on how much you owe. And what other people don't understand too is they only report it once a month. It's like on the statement date. So whatever your statement is, that's on your credit report for that whole month.
Yes.
And so you can do things to rescores, rapid rescores, stuff like that. You can do things to affect it during the month, but that's traditionally when it is. And most people are between the 5th and the 15th is when they report to the bureaus. And so that's kind of when your score will change and update. And it's always and it's a snapshot too. That's what I think people miss about credit reports is that it's a snapshot. It's just, it's just a picture at that moment in time. And it's nothing, that's not your credit score. That's your credit score at that moment in time. Because every time you do things, it will affect your credit score. And so that is in our industry, that's a funny thing because credit reports are good for 120 days, which means we have to have sold the loan to whomever within 120 days of pulling it. And so with today's market where it takes a while for a buyer to find a home and everything else, sometimes you have to pull that credit report again. And I will tell you, it's the scariest thing, to do.
There's been time between that last one, and you could have really messed some things up.
Yeah, they're like, I've got to pull your credit report again. Have you done anything?
Yes, that 120 days, right? You can do a lot of things.
You can do a lot of things.
And we always joke about, please don't go buy a Cadillac in those 120 days.
The one that always got me when I first started in this business was appliance package. They haven't even bought the home yet, but they've gone and bought an appliance package on credit for the home that I haven't even financed to be, and it has altered their approval. So I always send out this do's and don'ts letter when we first get them, and don't buy anything for
Don't
your
buy
house.
furniture. Don't buy a new car.
Even if they tell you there, this isn't it's not going to report on the credit. It's not going to. It does.
I think I just started sweating just thinking about all the times.
It happened too many. It happened too many.
It is.
So what's kind of the main difference between FICO and the new Vantage? I mean, what is
the trending data?
Okay.
So rental, right? So someone's renting, it'll pick that up now.
Okay.
So they can report to that. It'll generate a score. Again, we don't know exactly what that means yet, but it just came out yesterday that they announced that they're going to take that score. So it's big news for those three bureaus to be able to use their own and have their own recipe on what the FICO score means. And so, or what the credit score means. Because again, everybody says FICO score, and that just means that's that recipe. There is a new recipe to use today.
Correct.
And that's Vantage.
Yeah, and there's a lot of things being talked about for credit reports. Like there's one where they're saying these are ideas on the table that are trying to help reduce the cost of credit reports. To where if you pull just one report and it's over. The number I've heard is 700, then you don't have to pull other ones for FHA. They're looking into things like that to help reduce the cost. The industry is drastically trying to figure out how to help with costs because those costs are passed on to the borrower and they affect the closing costs. And so the industry, it's funny when people talk about it, I'm like, trust me, I know. And so, there's a lot of things, but it's a highly regulated, and it's also, there's a lot of, if things go wrong, they go wrong. And so, because if you foreclose on a home, I mean, it's a lot of money for the investor to get it ready, do all the legal stuff, keep it up to date. It's a lot of expense goes into, getting, trying to sell that home and recoup some of their value. And so they don't, people always talk about how they want to foreclose on it so they get the equity. I'm like, no, trust me. There's a whole lot that goes into that because especially in Texas, it takes about a year from when it's foreclosed on before it can go back on the market, just because of all
costs associated with the fees.
Yeah.
maintaining a home for,
Mowing the yard.
taking care of it,
Yeah.
make sure the grass doesn't die, make sure, the plants don't die. So yes,
Yeah.
there's a lot of fees involved in that process.
And so that's one of the reasons why, adjusting things that we've been using for decades, and they feel very comfortable adjusting those, the use of credit reports, credit scores.
Yeah.
Adjusting those kind of is a scary thing for the industry as far as the people that are investing in it, because they don't really know for about another 5 or 6 years if it was a good idea or not. If we start using this new score and then 6 years down the road they find out that the scoring model wasn't very good, then they have to make adjustments. And so there could be, so that's why it takes a long time. People always wonder why it takes such a long time to make maneuvers in our industry, because there's a lot on the line.
Well, and you're dealing with and you're dealing with the government, and so when we know that it doesn't move as quickly as we would hope when we're making those changes. But we've been talking about this for years.
Oh yes,
for this
for
new
these
scores
6 or 7
coming out.
years.
I mean, again, going clear back to the 80s when FICO came out, the 90s when Fannie Mae and Freddie Mac decided to use it as their scoring model. We've been talking about it for years. A lot of people say it seems like it's for us as lenders, that it is not a choice for us.
Right.
We don't have a choice, and that is 100% true. We have to, in the lending world, we have to pull a credit report that has 3 scores.
Yeah. Yeah, and that we do follow a lot of rules, and so that's just one of the things we have to do. And whether we like them or not, we do have to follow them, and we do the best we can to make sure that you get the best advantage of them. I do want to thank you so much for coming down. I appreciate that. Makes it definitely puts us on the map. So we're very very thankful for that.
Of course, thanks for having me.
Yeah, and hey, just remember, if you are looking to buy or sell, don't forget it's Rambo Realtor, or at Rambo Realtor on Instagram. Make sure you reach out to him. He will take very good care of you. And again, thank you so much for watching the show. This is the home team, of course, with Colton and Michael and our superstar Joel Howard. This segment was brought to you by Security National Mortgage, where we turn houses into homes by financing your American dream. And in just a minute, you're going to see some commercials with listings on there. If you do like any of those homes, if you go through the QR code to reach out to the realtor and you end up purchasing one of those homes and you use us for financing, you'll get 1% off of that interest rate for the first year. Thanks for watching, and we'll see you next week.